Well, good morning and welcome to this week's Market Carver. Here we are in the middle of November. I hope you are getting ready for Thanksgiving. We sure are at the Clark household. It is my favorite holiday of the year, short of Easter. People get together, we break bread, have good times, and I'm looking so forward to that with my friends and family. Hope you are as well. We have a lot to talk about in the Market Carver today. I'm not even going to go over the agenda with you. I'm just going to start. This first thing is over senior loans, and a lot of conversation is coming out today over what Jerome Powell, the Federal Reserve Chairman, is going to do, how that's going into the Biden plan with all of the elections that are going on. And really, it's an interesting period of time for us in the financial world when the largest players tend to get things wrong. And that's what's really happened with interest rates. The amount of money that's coming into the market, the anticipation of even greater inflation, and interest rates have rather been curtailed. Now, how do we play that at the Financial Enhancement Group? Well, you've heard me for years, if you listen to this program, say, hey, we don't do mutual funds, never have, never will. Closed-end mutual funds are a different story. And you can actually see the disparity between the purple line, the orange, and the blue on your screen right now. Those, for all intents and purposes, are the same investments, but the return differential has been incredible. And that really comes from being able to buy things at incredible discounts from other investors who, quite frankly, have put money in things that they didn't understand. That's when we use closed-end funds. It's the only time that you will ever have anything in your portfolio that I don't have in mind, and that's because you can't buy a lot of them. But when we see massive market volatility, that's one of the things that Adam and Andrew go after to really get us into better shape. S&P 500 earnings per share have returned to what they would say the trend being back to normal. The earnings continue to rise. Earnings are a big part of what drives an economy, what drives, and ultimately what drives a market, just not necessarily in the short term. But the trend is back to where it belongs. Profit margins are at a new record high. And that's an incredible story, knowing what we've come out of. You hear all of the economic problems with supply chains and everything else, and then we see these profit margins. It's kind of like, wow, this really is cool. But you can see in that chart that's kind of like alligator mouths, if you will. You know, there's big dips. It's like climbing the Grand Canyon. There's big dips when we look through an economy in terms of what normally happens. And here we are on another peak. We'll see how long that is able to sustain. When we look at global valuations, now this is looking forward, not in terms of where we are now. We got to ask a question, why in the world we don't have more international exposure? And this is one of the things that I try to explain to people of why active portfolio management is so important. Quite frankly, the European market, the global market, has just not done that well compared to the United States. So if you look at the highest bar on that chart and you go to the S&P 500, you can see what our forward earnings look like here in the United States relative to where you are in other places. Now, this is going to get really, really confusing here for a second because, believe me, it confuses professional investment people. But consumer sentiment and investment sentiment typically function together. The better I feel about life, typically the more money that I'm willing to invest. The worse I feel about life, i.e. consumer sentiment, that gets measured by Michigan University. I think it started in 1974, but I could be off a little bit. This chart doesn't go quite back that far. But you can see when consumer sentiment typically falls, then investor sentiment typically goes with it. And what we're seeing right now is consumer sentiment declining and investor sentiment rising at the same time. It just doesn't normally happen. But it's a very, very interesting paradigm that I'm seeing as I'm sitting down with you guys in the office and having conversations. We're worried about the economy, and yet we look at the earnings and we look at the market, and that's why we will always try to remind you at the Financial Enhancement Group, earnings or the economy and the market are two separate things. Another news, job openings per unemployed are now at a record high. There are more people who want a job or more people wanting to hire than there are people looking for jobs. That is interesting. It's never been this high, and it's an incredible thing. We talked about it at the Thirdly. If you missed that, go back and review the Thirdly video. I hit it a little bit. You also have voluntary quits at a record high. A number of people are just saying, I'm not going to do it anymore. and just walking out. COVID did a lot of things to this economy in a lot of different ways, but it also did a lot of things in between our ears into the human mind. And some people realized, you know what, it just didn't worth it anymore. You're seeing those record highs hit. That's what economists will tell you. I would always tell you to refer back to the demographic charts that we talked about in the thirdly, the peak of the boom being between 1957 and 1961. That was the ages they were born. Do the math, go forward. You're just getting people to a period of time. It's kind of like, you know what? Markets at all-time highs. I've got enough money. Why do I have to go through this exercise of working anymore? I'm going to stay home, play with the dog, play with the grandkids, and enjoy a little bit of life. It looks to us like a lot of that is happening. It's going to change the economy in a lot of ways. Hey, if you're already one of our families, you know this is tax planning season. We're on top of that. You're getting phone calls over QCDs and over contributions and conversions and things you need to consider. If you're not one of our families yet, schedule your next steps meeting. One of the people on our team would be more than happy to see you. And if you want more information, don't forget you can check out our radio program, Consider This Program, on WIBC Saturday mornings, as well as other radio stations across the state of Indiana. And anywhere you listen to podcasts, Consider This Program. Happy to have you along. I hope you have a great week and prepare for Thanksgiving. Go buy food. I'm worried they're going to run out of lamb before it's time to actually buy it. Have a great week. We'll see you soon.